Today I want to talk about something that different from what I've done in my blog before. I started a few months ago and I just finished my corporate finance course. The concept that I learned in corporate finance course allowed me to look back and clearly see the logic behind every action I took. So today I want to break down how 3 key concepts from my textbook literally reshaped my entire investment. From a rookie just holding stocks to, well, what I do now. My investment strategy can be said to have been shaped step by step by these 3 key concepts. Okay, let's dive into the first concept. It's a fundamental one, the time value of money. What I've done before is all based on the understanding of the time value of money, because it's a simple fact that money has an opportunity cost, and like 100 HKD or USD is much valuable than the same 100 HKD or USD promised to me next year, because today I can actually use it. I can invest it, I can make it grow, right? Look at this island. It looks like a barbell. It looks like a barbell, right? And especially when I bought the gold stocks in Hong Kong stock market, what I've done is just long-term holding. Super simple, right? But after a few weeks, I was getting impatient because it was too slow to generate profit for me. It was just like I was looking at the price and it's moving, but my money is just like sleeping in the sky. So the efficiency was too slow. That's when the time value of money really hit me, and I couldn't stand it anymore. As I began pursuing efficiency, I encountered the second concept. It's called the trade-off between risk and reward. It's exactly what it sounds like. On one side you have risk, and on the other side you have rewards, right? So if you want more reward, you gotta be willing to take on more risk, right? So I went from being a passive holder to active trader. I start high frequency, what we call making tea, and my goal was simple. I wanted to capture those like tiny waves, and it was exciting literally until the market decided to remind me what risk really looks like. During that time, several pullbacks in gold prices made me realize that I must diversify my investment. So I immediately bought stable blue chip stocks and highly liquid short-term ETFs. In this way, even if my aggressive portion fluctuated, the risk of the entire was kept within an acceptable range. Therefore, looking back on the entire process, the time value of money is the fundamental reason driving my continuous optimization, and the risk-reward trade-off taught me to use like efficiency tools like day trading and leverage, and diversification provide the ultimate safety net for all my operations. Anyway, hope all you guys be rich and happy and healthy. Peace.